Some other tips.
What was that?
I don't know. Hey guys, we're back with another video.
And we're here to break down all the numbers, tips, and lessons we learned so you don't have to guess when it comes down to financing land.
So here's the exciting part. Our last video went viral, almost 300,000 views, and so many of y'all asked us to deep dive on financing land. So this is part 2.
And to make it easier, we created a how to buy land workbook.
Yes.
It has checklists, budgeting tools, financing breakdowns, and a step-by-step guide to help you plan for your land purchase.
So click the link below to grab yours today. This workbook guides you as you prepare to buy land. All right, let's start with land loans. Banks see land as riskier than a house because it's harder to sell if someone defaults on the loan. That means you'll need higher credit scores, larger down payments, shorter loan terms than a traditional mortgage.
And there are 3 main types of land loans. You have the raw land loans, which is completely undeveloped land, no utilities, no roads. You have unimproved land loans where some road access or nearby utilities. And then you have improved land loans with its utilities and its access to the property already in place.
And let's break that down in detail. Raw land loans. So raw land, as I mentioned, is the riskiest. Most banks want a credit score of 700 plus. Down payment between 30 and 50%. Long terms going to be between 10 to 15 years. And interest rates will be between 7 and 12%, sometimes higher, just depending on the lender and the location that you're in.
And here's why. Raw land has no infrastructure, so if you default, it's harder for the bank to resell it. Here's a few banks that offer raw land loans. Wells Fargo, Bank of America, U.S. Bank. Local banks sometimes offer better terms because they understand the local market.
And we know everyone's not in Florida, so look up your local credit union and they may offer better terms. Here are some tips to improve your odds of getting approved for a loan. Provide proof of stable income, keep your debt to income under 45%, and offer a large down payment if possible. Have a clear plan for the land, like building in the future. Unimproved land may have some access to utilities or a road, making it slightly easier to finance. Requirements are usually a credit score of between 680 and 720. Down payment between 25% and 40%. The loan terms are typically 10 to 20 years, and the interest rate is typically 6 to 10%. Unimproved land loans may require a survey showing access to utilities, and banks will often ask about zoning to ensure that your intended use is allowed. Improved land is the easiest to finance because it's already ready to build. Those requirements are between a 650 and 700 credit score. Down payment typically ranges from 15 to 25%. The interest rate is about 5 to 7%, and the terms are typically 15 to 20 years. Here's the breakdown of what happens when you apply. Number 1, you got to get the pre-approval. The bank going to check your credit. You got to have the right income, and they're also going to check your debt to income. Number 2, the land has to appraise, and you also have to get a survey to confirm that, this is the land, these are the boundaries, that they're paying for what you say this land is. Number 3 is zoning confirmation. They're going to check to make sure that this land is zoned for what you're trying to do with it. Number 4, loan approval. You're going to get the terms, the interest rate, and the monthly payments are all set at that time. And number 5, closing. Pay the remainder of the balance due, sign the documents, and get the deed to your property.
So with this type of loan, you still will be hit with interest, just like a mortgage, but it usually have shorter terms, and the payments usually start right away.
Yeah, and some lenders allow interest-only payments at the start of raw land, but that is not common, so don't bet on that.
Right, and if the land is unimproved or improved, you may qualify for a longer term or a lower interest rate, especially with local lenders who know the market.
Yeah, so like non-traditional lenders, not banks, just like loan officers that you can call. So Next, we're going to talk about construction to perm loans in detail. Construction to perm loans are perfect if you plan to build right away. They finance both the land and the construction all in one loan.
All right, so with those construction to perm loans, here's how they work step by step. All right, number one, you do a loan application and you got to be approved for at least 680 with a DTI under 45%. And your building, your plans have to be approved. Number two, you close on the land. That's when your loan will fund the purchase of your land first. And number three is the construction phase. This is when you get payments from the bank to give to your builder as they continue to build in stages. So let's say they just poured the slab. There's a payment for them to be paid for pouring that foundation. They just framed the house, all right? The bank's gonna send you a draw for the framing. Step number four, then it converts to a permanent loan. Once construction is complete, the loan becomes a standard mortgage.
These down payments typically range from 20 to 25%, and the interest rate during construction is typically 6 to 8%. Here are a few banks that offers the construction to perm loan: Chase, Wells Fargo, U.S. Bank, PNC, and as we mentioned, many of the local credit unions. So definitely reach out local as well to see what they have to offer. Next loan type and most popular from the comments, owner financing. Owner financing is when the seller acts as the bank. This is flexible and no credit check required in most cases.
And with owner financing, it's typically a 10 to 20% down payment. Interest rates are usually higher than banks. The terms and lengths are negotiable, and you got to make sure that you keep a record with the county.
And to add on to that, a lot of you ask, what does it mean to get an attorney or a title company to help you with owner financing? So title companies are typically ran by attorneys, and they will record the deed to make sure it's in your name, and they will also research the property to make sure that the title and the deed is clear before purchasing it. So they're the ones to make sure that this person that's selling you this deed, that is legal, that is theirs, and that they have the right to sell it to you. And that nobody coming down the line and taking that deed from you, because sometimes that happens. So you can Google a title company in your area, and of course, look up the reviews for any company that you deal with, and you'll be able to use one of those if you're negotiating a seller finance deal.
And that's right. Always negotiate the terms that work for you, but always use a lawyer or a title company to protect yourself. All right, let's talk about DTI, which stands for debt to income ratio. Your DTI is basically a percentage that shows how much of your monthly income goes towards paying debts. It includes things like credit cards, car loans, student loans, or any other recurring payment you may have. Lenders use it to determine if you can handle another loan, like a land loan, or a construction to perm loan. For example, if you earn $5,000 a month and your monthly debts are, let's say, $2,000, your DTI would be 40%. Most banks like to see a DTI under 45% for land loans. A lower DTI means you have more room in your budget to make new payments, which makes lenders more comfortable approving your loan. So before you apply, it's a good idea to calculate your DTI, and if needed, pay down some debt to improve your chances.
Some other tips.
What was that?
I don't know.
Come on, Paula there.
All right, well, let's go. Keep going. Let's finish this. All right, come on. Don't go kill me. Oh, you done got me. Ooh. Other tips: show stable income, offer a large down payment if possible, and have a plan for the land ready to share. If your credit isn't perfect, owner financing may be your best bet until you improve your credit. Buying land is a huge step, but it's very doable if you understand the loan types, credit requirements, and monthly payments.
All right, we hope this deep dive helped you feel confident before making an offer.
And don't forget, To grab our How to Buy Land Workbook, in the link below, it has checklists and step-by-step guides to make this process simple.
Yep, make sure you grab a copy of that workbook. We believe it's going to help you out a whole lot on your journey. And don't forget to drop any of your questions in the comment section. And don't forget to hit that notification bell. Hit that notification bell so you can know when we drop videos just like this. And subscribe if you're not already subscribed. Hit that subscribe button. Come on, take you a few seconds to go in and just tap and subscribe. Tap, take the notification button. Don't make me preach up in here.
And thanks so much for watching, and we'll see y'all next time as we continue our journey.
All right, see y'all in the next video.
Bye.
Be blessed. And as y'all can see, it done got dark on us, so we about to get on up out of these woods because we don't know what's back there. All right, as you can see, my wife already gone and took off and left.